Hello, everybody. Welcome back to Beer and Money. My name is Ryan Burklo, and on today's episode, we're going to be talking about the rules of inheriting an IRA. I just had a conversation with a prospective client, and they inherited an IRA, and they had a bunch of questions as to what the rules and obligations are when it comes down to this. So that's today's episode. Make sure you earmark this if you have any questions or thoughts, or maybe you have a friend or family member that had this very question, and that way you can forward this on to them. So let's dive right in. So inheriting a traditional IRA or traditional 401k, traditional retirement account, a big thing to be aware of is your parent, in this example, hadn't paid taxes on the money that's sitting in that account. And because they haven't paid taxes on that account, the IRS is coming to knock on the door. The IRS most likely is going to want you to start taking money out of that account so that you pay taxes on that money. How quickly you take the money out and whether or not you need to have specific dollar amounts that come out, that's for today's episode. So let's dive right in. So first and foremost, if you have an IRA that you're inheriting, you need to figure out, did your parent take a required minimum distribution in the year that they passed away? So if they passed away this year, did they take their RMD? So RMD is required minimum distribution. Okay. If they did not take their RMD yet, and they should have taken their RMD yet, make sure you have that RMD kicked out. Meaning there's a formula that's out there. I'll put some information in the show notes. Use that formula, or make sure you talk to your CPA and make sure you kick out the amount of money that should have been kicked out so that taxes can be paid on that and report that on the tax return. Secondly, if they have not taken the RMD, and maybe they didn't need to take the RMD, maybe they weren't of age to take the RMD, they didn't have to do it just yet. Maybe they were 60 years old. If they didn't do that, well, now the good news for you is you don't have to take that RMD for your parent, nor do you need to worry about taking out specific dollar amounts for yourself. But what you do need to worry about is there's this 10-year window, meaning over the next 10 years, you have to distribute all of the money in that account. And if you don't, taxes and penalties may be coming your way. So that's number one. Let's look at the opposite side. So let's just now see that your parent was taking RMDs. You've kicked out the RMD for your parent for that given year. Now what do you need to do? So now what you need to do is you need to take required minimum distribution, and it'll be based on your life expectancy. Go look this up on irs.gov. And so you need to, at minimum, be taking out the RMD every year. And specifically, in this 10-year window of time, you still need to make sure you deplete the full retirement account, meaning you need to be taking that money out of that IRA. That's key. If you don't, there may be tax and penalties that come your way. Okay? So those are the rules around inheriting an IRA, whether or not you need to be taking distributions every year in the form of RMDs and or making sure that you are depleting that account over the next 10 years. Okay? So now that we understand the rules, now we need to make sure that you have established and set this account up correctly. So when you inherit the IRA, the first thing you need to do, step one, is make sure you retitle that IRA correctly. It must be retitled into what's called an inherited IRA or beneficiary IRA. For example, it might say IRA FBO Alex Smith, comma, your name the beneficiary. So that's a retitling, and essentially it's an inherited IRA. That's number one that you need to do. Number two is make sure that your reporting or the custodian issues a Form 1099-R to you, the beneficiary, for that year's withdrawal. Those amounts are taxable as ordinary income, so you just be aware of it, especially in a traditional IRA. And the income is reported on your personal tax return, Form 1040, not the estate's tax return. So if you're having to take an RMD out for your parents in this case, that's going to hit your tax bracket. Okay? So we're talking about RMDs. As discussed earlier, you may have to take RMDs out for the next 9 to 10 years. Make sure you are doing that and set up a schedule for that. And make sure that you have fully emptied the account by the end of year 10. And keep in mind, each RMD is taxable income to you the year you withdraw that money. Step number 4, make sure you coordinate the descendant's final RMD. So kind of going back, but wrapping everything up, we've got the RMDs for yourself, and you're coordinating the descendant's final RMD in their tax return. Okay? Last but not least, I want to make sure you're fully understanding this. You're taking this money out, it's hitting your taxable brackets this year or next year, the year that you're taking it out. Having some sort of strategy in this so you're not overpaying on taxes is key. So make sure you're working with a CPA and your financial planner to make sure this is coordinated so you have the best efficient tax withdrawal strategy for yourself, and make sure you're understanding where this money should be going. Should you be spending it? Great. Should you be putting it somewhere else? That also might be up for conversation. So that's what I had for today. I want to make sure I go over those rules with you on inherited IRAs. Make sure you go up to the top of the page at our beerandmoney.net website, and there's a contact us. If you have any questions from today's episode, that is a great spot to email us with any questions. Or if you have a topic on your mind that you want to make sure we chat about, that's a great spot to reach out to us as well. We'll put some information in the show notes. We hope this is helpful for you. As always, we hope this episode helped you have actionable steps for your financial plan to live the life that you want, not the life that someone is maybe dictating towards you or the life that you think someone else wants for you. Hope this episode is valuable for you. Cheers.
This podcast is for informational purposes only and is not to be construed as tax, legal, or investment advice. Although the information has been gathered from sources believed to be reliable, please note that individual situations can vary. Therefore, the information should be relied upon only when coordinated with individual professional advice. Guest speakers and their firms are not affiliated with or endorsed by Park Avenue Securities, Guardian, or Quantified Financial Partners, and opinions stated are their own. Guardian, its subsidiaries, agents, and employees do not provide tax, legal, or accounting advice. Consult your tax, legal, or accounting professional regarding your individual situation. All investments and investment strategies contain risk and may lose value. This material is intended for general public use. By providing this content, Park Avenue Securities, LLC is not undertaking to provide investment advice or a recommendation for any specific individual or situation, or to otherwise act in a fiduciary capacity. Please contact a financial representative for guidance and information that is specific to your individual situation. Ryan and Alex are registered representatives and financial advisors of Park Avenue Securities, LLC. OSJ 200 Market Street, Suite 1850, Portland, Oregon 97201. Phone number 503-221-1226. Securities products and advisory services offered through Park Avenue Securities, member FINRA, SIPC. Financial representatives of the Guardian Life Insurance Company of America, Guardian, New York, New York. Park Avenue Securities is a wholly owned subsidiary of Guardian. Quantified Financial Partners is not an affiliate or subsidiary of Park Avenue Securities or Guardian. Ryan Burklo, CA Insurance License Number 0K24924. Alexander Collins, CA Insurance License Number 0H24806.
8500928.1, expiration date October 2027.